So Dan, and just obviously lots of clients going to be listening with different kind of backgrounds, etc. But yeah, a few key things you said there. EPS stands for earnings per share, and effectively what you're saying is that shares will only go up if their earnings or their profits go up. So we need earnings to go up to make the shares go up, etc. Shares don't just go up willy-nilly. Sometimes they do for other reasons or factors, but generally shares will go up if companies are making more profits, etc. So you touched there on interest rates. I suppose I might say on that kind of line of thinking. So yeah, I mean, definitely in the last 12 months, we've had a few cuts, and now we've had a rate rise. Thoughts, intention, or crystal ball about where interest rates might be going or not in Australia, around the globe, and again, how that might affect things for particularly retirees.
Yeah, look, it's very topical. Obviously, the RBA had to come and increase interest rates because they were uncomfortable where inflation was heading. And obviously, given the indebtedness of Australian households, higher interest rates do tend to have a negative impact on discretionary spending, increasing the cost of capital for companies. So whilst the 25 basis point rate increase, which is what we got from the RBA last week, is not a game changer, it is an area to monitor. There are certain sectors on the market, like consumer discretionary and interest rate sensitive businesses like your real estate, utilities, and small caps, which have a higher sensitivity to movements in interest rates, might lag the other parts of the market. But at this stage, we don't expect rates to move materially higher from current levels. The market is expecting maybe one more rate hike in May or June this year. That's if the CPI or the inflation prints remain elevated for next quarter. But our own inflation indicators do suggest that the pressure should start to fade away over the second half of the year. But this is really data driven, and this is an area we're keeping a close eye on. At this stage, we're not making any major adjustments to our growth expectations, just because of the RBA rate hike this month.